Boost your business. Take your business to the next level with NCB SME Boost. Get access to up to 250 million Jamaican dollars. Speak to a business representative at your nearest NCB branch to apply for the boost you need today. Conditions apply.
Maybe you can't predict the future, but you can certainly calculate some aspects of it. Our new pension projection calculator helps you do just that. Make real-time calculations and projections of your pension based on your contributions. First, go to smart.ncbinsurance.com and click Pension Projection. Then scroll down to the calculator fields and fill them all. Pro tip, hovering over the help icon provides a description and the expected value. Click Generated Quote when you're all done. Then, the retirement projection section will pop up fully populated. Take a look at your projected annual pension for early, normal, or late retirement. Get even more in-depth. Click View Yearly Projections and see a detailed schedule of your pension fund values. Finally, click Contact Me with more details and share your contact info to get a follow-up from an agent. The NCBIA Pension Projection Calculator puts the power in your hands. Visit smart.ncbinsurance.com today and work out what your future will look like.
We know what you want to do more of, and it's not waiting for life to happen. You want to explore more. New worlds, different passions. You want to share more. Amazing experiences, knowledge. You want to care more. For yourself, for the people around you. We know you want to do more things in life, so Clarion does more for you. In choosing the right experts to meet your every need. In products and services to reach your goals. And now, we do more than any other bank, digitally. Empowering you with new technology in the hands of best-in-class professionals for more convenient digital tools, a more seamless banking experience, and more precise financial solutions. Clarion does more to bring you, your family, or your business into a new world of banking so you can do what you really want, to live more. Clarion.
It's a win-win summer! Get a chance to win $1 million. Make a purchase of $15,000 or more with your NCB credit or prepaid card for an automatic entry to win big. More purchases equal more chances to win. 5 cards, 5 winners, $5 million. Don't have an NCB credit or prepaid card? Apply today at creditcard.jncb.com. Conditions apply. Visit www.jncb.com/winsummer to learn more.
Boost your business. Take your business to the next level with NCB SME Boost. Get access to up to 250 million Jamaican dollars. Speak to a business representative at your nearest NCB branch to apply for the boost you need today. Conditions apply.
Maybe you can't predict the future, but you can certainly calculate some aspects of it. Our new pension projection calculator helps you do just that. Make real-time calculations and projections of your pension based on your contributions. First, go to smart.ncbinsurance.com and click Pension Projection. Then scroll down to the calculator fields and fill them all. Pro tip, hovering over the help icon provides a description and the expected value. Click Generated Quote when you're all done. Then, the retirement projection section will pop up fully populated. Take a look at your projected annual pension for early, normal, or late retirement. Get even more in-depth. Click View Yearly Projections and see a detailed schedule of your pension fund values. Finally, click Contact Me with more details and share your contact info to get a follow-up from an agent. The NCBIA Pension Projection Calculator puts the power in your hands. Visit smart.ncbinsurance.com today and work out what your future will look like.
We know what you want to do more of, and it's not waiting for life to happen. You want to explore more. New worlds, different passions. You want to share more. Amazing experiences.
Ladies and gentlemen, good morning, and welcome to our third quarter investors brief. I am Dennis Cohen, Group CFO and Deputy CEO, and with me on the panel is our President and Group CEO, Mr. Patrick Hilton, and also our General Counsel and Corporate Secretary, Mr. Dave Garcia. I'll be sharing with you highlights of our financial results released yesterday, after which our President will discuss the outlook, and as customary, a question and answer session will follow, moderated by Mr. Garcia. Yesterday, the group reported consolidated net profits of $25.9 billion for the 9 months, a $12 billion or an 86% increase over the prior year. The third quarter performance reflects consistent improvement since the start of our financial year, as we continue to focus on executing a range of strategic initiatives geared at paving the way for a sustained long-term resilience and performance. As a regional leader in the financial services industry, the group has been expanding its capabilities to position the organization to continue capitalizing on opportunities. This resulted in expansion in our core business portfolios, contributing to growth in our key performance drivers. We continue to monitor the challenging market conditions and proactively focus on implementing capital management strategies that ensure business continuity and growth. To this end, the Board of Directors thought it prudent to not declare an interim dividend at this time. I'll now share highlights of yesterday's stock exchange release. The group reported net profits attributable to our shareholders of $18.6 billion for the 9 months ended June, an 88% or $8.7 billion increase over the prior year. Operating revenues of $106 billion grew by 15% or $14 billion. The net results from insurance activities increased by $7.4 billion or 41% over the prior year. Our Life, Health and Pensions business, LHP, had improved results over the prior year, primarily stemming from higher gross premiums and favorable actuarial reserve adjustments. Notwithstanding the commendable revenue growth in LHP, property and casualty had a reduction in net revenues, mainly due to higher claims ratio coupled with lower premiums. Banking and investment activities also contributed to improved performance, increasing by $6.4 billion or 9% to $80 billion. The growth was driven by higher net interest and net fees and commission income, resulting from growth in our loans and investment securities and card transactions. These gains were somewhat offset by fair value losses on our investment portfolio, in particular equities, reflecting the general trend of increasing interest rates and reduced consumer and investor confidence. Whilst the interest-earning portfolios have grown, current market conditions continue to decline, causing a reduction in gains and sale of debt securities and losses in equities during the current period. Net fee and commission income represented 18% of net operating revenues, and as you can see from the graph, over 60% of fees are earned from channel usage, investment management, corporate finance, and card-related fees. 50% of the increase in fees was mainly due to increased volumes related to card usage on e-channels, point of sale, and other digital channels earned in our payment services segment. Branch transaction fees represented only 4% of net fees and commission income. There was also a 16% or $542 million increase in corporate finance, investment banking, asset management, and brokerage fees earned across the region, which is driven by corporate transactions and assets under management. Operating expenses of $77 billion grew by $5.7 billion or 8%. Staff costs and professional fees account for a substantial portion of the growth in expenses as we continue to invest in digital talent for our fintech initiatives, as well as expertise and resources required for our transformation journey. Notwithstanding the increased expenses, it was outpaced by the corresponding growth in revenues, resulting in an improved cost-to-income ratio of 71.87%, down from 76.12 in the prior year. The growth in revenues contributed to increased profits, resulting in an improvement in our return on asset and return on equity up to 1.75 and 16.14 from 1.01 and 8.45% respectively in the prior year. Now focusing briefly on our segment performance. Our LHP segment continues to be the largest contributor to operating profits with $20 billion, reflecting a 6.5 or 47% improvement over the prior year. The segment's growth reflects $7.3 billion in insurance activities, and net interest income also up $3.5 billion, as we continue to see a rebound in life insurance activities in our major territories. Net insurance activities reflects favorable actuarial reserve adjustments, higher premiums partially offset by higher surrenders. Profit performance was also boosted by a $2 billion increase. Profit performance was further boosted by a $2 billion decline in operating expenses, mainly due to lower consultancy fees. Overall performance was, however, tempered by reduced gains in foreign currency and investment activities and other income of $4.6 billion and $1.6 billion, respectively. Treasury contributed $8.5 billion in operating profits, a 16% improvement over the prior year. The improvement was mainly due to a $1.4 billion increase in operating income from improved asset yields and foreign exchange gains, while operating expenses for that unit declined by $331 million. Our wealth unit recording operating profits of $6.7 billion at 21% or $1.8 billion decline compared to the prior year. This fall-off reflects a $2.9 billion reduction in gains from investment activities due to reduced gains from investment banking activities, reflecting the general adverse market conditions in securities and equities markets and also investment banking. Our corporate and commercial banking unit reported net results of $5 billion, up $840 million or 20% over the prior year. Growth in this segment was mainly due to a reduction in allocated costs arising from changes in our cost allocation methodology. Consumer and SME banking, together with payment services, both reflected reductions in profit as both segments saw increases in operating expenses. General insurance recorded net results of $3.6 billion, a $1.4 billion or 28% reduction compared to the prior year. This segment's performance was driven by low net results from insurance activities due to a higher claims ratio and less net fees and commission income. It was also impacted by reduction in net interest income, fees and commission, gains on foreign currency and investment activities, and an increase in credit impairment losses on financial assets. Looking briefly at the components of our statement of financial position, our asset base now stands at $2 trillion, an increase of $129 billion or 7% over the prior year, driven primarily by growth in our loans and investment securities, which grew by 11% and 3% respectively. Our equity declined to $146.6 billion, down by 6% or $9.8 billion from the prior year. This was primarily due to mark-to-market losses on fair value through OCI securities, as increase in interest rates has led to sharp declines in bond prices. Customer deposits closed at $712 billion, increasing by 11% or $71 billion. Policyholders' liabilities grew to $444 billion, up 2% or $9 billion from the prior year. And also of note, all our regulated entities exceeded their applicable capital and regulatory liquidity requirements. Ladies and gentlemen, that concludes the highlights of our third quarter performance, and I must say that regardless of the challenges posed by the current market conditions, we remain steadfast on realizing our vision of creating a digitally powered Caribbean financial ecosystem, and our results have simply served to bolster our optimism. Let me close by acknowledging the efforts of our team. NCBFG would not be the institution it is today without their commitment to the organization and them serving our customers. With that, I now hand over the proceedings to our president, who will share his thoughts. Thank you.
Thank you very much, Mr. Coyne. I want to begin where you closed by thanking all who have contributed to the growth, development, and the performance of this institution. We are grateful for your support, for your continued contribution, and we look forward to an even brighter future together as we continue our march of building a great business. Before I get into the substance of what I have to say, I'd like to start by acknowledging our chairman, Honorable Michael Leachin, fellow directors of NCB, our company secretary, our external auditor, our shareholders who are participating, our customers, executives and management and staff of NCB Financial Group and its subsidiaries. A very special good morning to you all. I want to thank you for joining us this morning for our Q3 investors briefing. As I've said before, and I'll say again, we appreciate having this forum to communicate directly with you, our shareholders, and all our stakeholders about our performance and to share our perspectives on the way forward. This month of August is a special month. It's a month in which both Jamaica and Trinidad will celebrate diamond anniversaries. That is 60 years of independence. Of course, each milestone, each anniversary, carries with it an opportunity for both celebration and for reflection. We can celebrate the progress that has been made, while we look ahead with a desire to achieve much more for ourselves, for our nations. This year, we also have a special celebration for the NCB Financial Group, which has its roots dating back 185 years ago to 1837, when the Colonial Bank of London, England, opened its doors on Harbour Street in Kingston, Jamaica. Through a series of mergers and acquisitions, the bank became Barclays Bank in Jamaica, and then eventually emerged in the special month of August 1977 as NCB, some 45 years ago. By the way, August is my month of birth as well, so you can understand why it's special. All this while making the journey from being part of Jamaica's colonial past, becoming an indigenous institution, supporting an independent Jamaica, and most importantly, the aspirations of our people in Jamaica and throughout the region. In April 2016, the NCB Financial Group was incorporated and licensed under the Banking Services Act as a financial holding company for National Commercial Bank Jamaica Limited and the various other entities that the group had by then grown to include. Today, we have a presence in over 21 territories in the region through our majority shareholdings in Clarion Bank Limited in Bermuda and through our majority shareholdings in Guardian Holdings Limited. This year, as I mentioned previously, we celebrate 185 years, and to pay homage to our customers and employees who have been part of our legacy and our journey to becoming a leading financial institution, we have special celebrations planned for this year. At our last meeting in May 2022, we discussed the easing of the pandemic restrictions across the region, but also reflected on the uncertainty brought about by the conflict in Eastern Europe. And I, in my remarks at that time, encouraged us to resist the inertia that can come from waiting on a return to normalcy. In July 2022, the World Health Organization declared monkeypox a public health emergency of international concern. It supports the point, and I want to reiterate what I said, that we need to resist inertia that can come from waiting for a return to normalcy, because I don't know when that will take place, how it will take place, or in what form, or if there's just a new normal. And so we need to just accept things as they are so that we avoid the paralysis that fear and anxiety can sometimes trigger. Both fear and anxiety are inhibitors to progress. While we cannot control, ladies and gentlemen, what happens to us, what we can always control is how we respond, right? The truth is, the one thing we always have control over is our attitude in any set of circumstances. And so our attitude is always positive because, as Nelson Mandela said, and I quote one of my favorite quotations, courage is not the absence of fear, it is the ability to triumph over it. The brave man is not he who does not feel afraid, but more importantly, he who conquers that fear. And so sitting around and waiting for things to normalize provides the clearest path to disruption. So clearly, ladies and gentlemen, for us, that is not an option. It is within this context, and it is against that background, that I want to affirm that the NCB Financial Group remains focused, we remain committed to our aspiration of becoming a world-class Caribbean financial ecosystem with our purpose of empowering people, unlocking dreams, and building communities. We are committed to it, and we will make it happen. The points I will share today are around how we are moving forward as a company in doing this, and I will say to people, as I often say, many of these principles are applicable not only at the corporate level, but also on a personal level. Amidst what may feel like ongoing global turmoil, we will move forward, ladies and gentlemen, guided by three principles. Principle number one, we will focus on what we can control. Principle number two, we will remain close to our people. And principle number three, we will lean on and leverage our strengths. So in terms of principle number one, we will focus on what we can control. We certainly cannot control certain external trends, but we can control how we respond. We can control the transformation of our business model, and we are doing so and doing it deliberately. I like to use the examples of Blockbuster and Kodak. And Kodak in particular, because Kodak invented digital technology, but Kodak didn't want to disrupt what for it was a good business. So it kept it on the back burner. And you know what happened? They didn't control the changes. They could not control the changes, therefore, in their business model as the market started to change. Some of their hesitation, ladies and gentlemen, came from the fact that transforming one's business model often means introducing solutions that compete with your existing business. So they didn't like that because the business was good. But the failure to adapt ultimately resulted in the demise of both companies as their competitors, powered by new technology, provided customers with more relevant and value-added alternatives. So we will not be like Blockbuster and Kodak. We are committed to embracing external trends to disrupting ourselves rather than being disrupted. So I'll give you an example of one way in which we are doing this. In December 2021, we launched Link, our digital wallet. This enabled us to provide unbanked and even banked Jamaican individuals and micro businesses with access to a financial solution through a simple onboarding process on their mobile phones with no requirement to visit or engage with a physical location. Transfers to individuals and payments to businesses are free and take just a few minutes. Supported by a regulatory framework designed to facilitate greater financial inclusion, and our creation of a fintech in the form of Link that is a digital native, we have been able to provide a solution that eliminates a number of pain points and significantly enhances the experience of accessing and utilizing financial services for ordinary Jamaicans. It is no surprise that in the few months since its launch, that over 120,000 individual customers and over 2,000 merchants have been onboarded. Link is also the only digital wallet integrated with Jamdex, Jamaica's digital currency. In Q3, Link customers would have received the $2,500 in digital currency distributed by the government of Jamaica. In addition, Link customers can now make bill payments and purchase phone credit. For Q4, Link will focus on developing a merchant payment solution to further revolutionize the payments market and to enable easier access to digital commerce. On the surface, Link does seem to compete with other solutions within the group. The point I made earlier about disrupting ourselves. However, our ultimate goal is to maintain a sustainable and viable business. This requires providing customers with solutions that are relevant and value added as the world and technology evolves. As we look further, however, we recognize that Link's offerings are also complementary, right? As we must provide a variety of solutions that appeal to all segments of customers. Link allows us to better penetrate certain segments, such as the unbanked, as it provides a ready solution for them and persons who transact with them. We have, as I said before, learned the lessons from Blockbuster and Kodak. Hence, we are determined that the transformation of our business model will remain within our control, and we continue to pursue that effort in earnest. Principle number 2, which I mentioned earlier, we will remain close to our people. In the same way that the pandemic reminded us to stay close to our loved ones, we continue to stay close to our customers and to our employees. Without our team and our customers, we will be unable to deliver desired returns to our shareholders. So they are of paramount importance to us. Our focus on organization health continues, as well as our investments in building the capabilities and supporting the engagement of team members. With respect to our customers, we continue to listen to your feedback and to respond. We are committed to building a culture of true customer obsession across our group. At Guardian, our One Guardian digital platform for customers unifies all Trinidad and Tobago business product lines, delivering an omni-channel experience for our customers across web, phone, walk-in, and text messages. Key features include quick notes, online payments, client portfolio view across insurance and investment products, a health e-card, and an artificial intelligence bot built into the platform for real-time customer queries that are connected to our customer service for real-time support. Going beyond insurance at Guardian, we are creating an entrepreneurship and innovation development platform that helps Caribbean people to develop, to engage, and to innovate. This platform will guide any entrepreneur on how to build a personal brand, connect a person with other professionals, and create a sound strategy for their brand. Based on the feedback of several of our stakeholders, we have developed new ways of making banking, investment, and overall wealth building easier for our customers and for our business partners. In Q3, NCBJ launched NCB Assist Biz, which is an automated, self-managed solution for business customers to submit and to track the fulfillment of service requests and the resolution of complaints. Q3 also saw the launch of NCB Capital Markets mobile app. This app allows customers to view their portfolio balances, view their transaction history, stock market data from the JC, execute unit trust and equity trades, and make transfers between their NCB and their NCB Capital Market accounts. All these solutions, ladies and gentlemen, were guided by customer feedback. To get continuous feedback from our customers, instead of relying exclusively on semi-annual surveys as we did previously, we leverage our WhatsApp chatbot to get feedback from our customers on their experiences with us across a number of customer journeys and interactions. Principle number 3, which I mentioned as well, we will lean on our strengths and leverage them. Our legacy at NCB Financial Group includes overcoming many challenges due to our key strengths. I remind you of them: optimism, courage, resilience, determination. While some people have a problem for every solution, we know there's a solution for every problem. And we also know that there is a seed of greater opportunity within every challenge. We have experienced business growth in recessions. We have withstood many crises, including the 2008 global financial crisis. Following the 2010 Jamaica Debt Exchange, our bank became the leading financial institution in Jamaica based on profitability, notwithstanding suffering significant loss in income as a result of the restructuring of Government of Jamaica debt. So we continue to innovate, we continue to transform, we continue to build, and we continue to improve in a purpose-driven way. In the same way, we are not daunted by another global challenge. I want to encourage each team member. I want to encourage every customer of NCB. I want to encourage every shareholder to focus on what you can control, to stay close to those matters, and to lean on and leverage your strengths. In closing, I want to reiterate my gratitude for each team member, for each customer, for each investor, for each partner. We are grateful for your loyalty and commitment. On the eve of Jamaica's 60th tomorrow and Trinidad's later this month, I share my sincere hope that each nation will continue to flourish and magnify what has been accomplished in the last 60 years. Thank you again, and thanks for joining us today.
Thank you, Patrick. Well done. Hand over to you, Mr. Garcia.
Thank you, Mr. Cohen, and good morning, everyone. We will, as we go through, we will take questions in the following order. First, we will take questions that have been submitted beforehand, generally in the order in which they were submitted, and then we will take any questions that are submitted live. Any persons who are listening may submit questions either through our to our investor queries mailbox. That's ncbinvestorqueries@jncb.com, or online through the YouTube chat, which is being monitored during the course of the session. We'll start with some questions from Ralston Samuels, who identifies himself as a current and long-standing shareholder of NCB. Congratulations on a great quarter and 9 months year-to-date performance. And then the first question is for Bob, our CEO. I'll ask you to take this one. If we enter a recession in the next, say, 6 to 12 months, how does technology or digital capabilities help NCB manage through that? Whether it's managing for less credit losses, expenses, more flexibility, more revenues, or gaining market share. What's the benefit of all the technology investments if we have a recession over the next few months? Bob? I see Bob unmuted, but we're not hearing a response. All right, let me move on, and we can come back to Bob, to questions for Bob later. Question from David Rose, which I'll direct to you, Patrick. With the current shift to Link, will NCB be able to manage considering existing technology type issues? Adoption is still growing at a steady state also, but COVID-19 didn't radically shift payments, and we're still, he says, at where we began. You want to comment on that, Patrick?
Yeah. Well, I'm trying to interpret the comment or the question. I don't agree that COVID-19 hasn't shifted, what is it?
Hasn't radically shifted payments.
Oh, hasn't radically shifted payments. That certainly is not our experience. We have seen significant shifts in terms of, transaction volumes, the utilization of the alternative channels and so on by our customer groups. Overall, of course, transaction volumes have grown, but when you look at it in terms of percentages, there is a significant shift. And my expectation is that, two things will happen with the adoption of technology, and the leveraging of technology through the various payments mechanisms. One is that we're going to reduce the cost to serve, while at the same time improving the quality of the service, because that's the nature of the challenge that we're undertaking. And if you look at it, I made mention earlier that many of these transactions that people execute on Link are at this moment executed free of cost. So it reduces the cost to serve, right? Both for the institution as well as for the consumer, right? And the fact that it can be done without the need to engage any person or in any physical infrastructure also, facilitates enhancing the quality of the customer experience. From a convenience perspective, they can do it at any place, any time. They don't have to wait on, the opening of a branch or the availability of a customer service rep or a teller, right? They can do the transactions themselves. So we see significant shifts taking place. And you asked a question as to whether it would be a challenge. I think it is more a facilitator of future trends and a way in which the world is going and which we have to go. And given who we are, our size, the nature of our institution, we believe we have a responsibility to lead that change, and in a real sense to be the change that we need to see in this industry.
All right, thank you, Patrick. We'll take another question for you at this time, also from Mr. Rose. He says, I saw where your commentary spoke about building out a Caribbean financial ecosystem. What will that entail, especially as you speak to focusing on your digital roadmap at the moment?
Well, there are so many elements and components to an ecosystem, right? But what it does, if I can describe it in a more generic way, is to bring together a number of capabilities across the different segments of the group, which enables the customer to have a full service experience with the group. It enables the group to, whether leveraging on general insurance, leveraging on life insurance, leveraging on health, leveraging on, investment capabilities in like an asset management firm or in a NCB capital markets. What it does is provide a holistic set of opportunities for the customer in their interaction with our organization. It puts us in a position to be able to address all the customers' financial needs and to address it in a way that is beneficial, very beneficial to the customer, because they get the benefit of being able to leverage the capabilities that exist right across our various businesses. So our intention, and in a sense, it has already emerged in different ways. We see it in terms of some of the leveraging of capabilities of NCB capital markets by other areas in the group. Right? NCB capital markets, the Go IPO capability, and so on, which has been leveraged by other entities in the group. And we see where, things in the bank are being used to facilitate transactions in NCB capital markets, and then we see where Link comes in, is to create a whole ecosystem, financial ecosystem, which benefits the customer. In previous years, we used to talk about a financial supermarket where the focus was on the customer coming there to sort of shop. Here now, the focus is on a facilitation of the customer at any touch point, through any sort of interaction or engagement, being able to seamlessly access those range of financial services.
Okay. Thank you, Patrick. Can we see if we're now able to get the audio coming through from our Zoom panelists? So, Bob? No, we're still not hearing that come through. So I will then take some questions here for Dennis while we seek to have that resolved. Mr. Rose asks, I understand NCB is focusing on preserving capital, as you had indicated in your remarks, but what's the true state in respect of National Commercial Bank, Jamaica? I recall NPLs to gross loans surpassing 4% last year. Lending is slowing and cost of funding is rising on your side. You increased variable loan interest rates recently, but is it that NCB is pricing in further inherent risk down the line, which has been a primary reason to retain cash by not paying dividends to external shareholders?
That sounds like a loaded one. Quite a few things. Well, first of all, I mean, I think we all accept that, these are unusual times. We keep talking about the idea of the pandemic, the crisis that faces us. And at the end of it all, I think our most important role is to ensure the viability, the sustainability, and the strength of the organization. Our primary role is the protection of our depositors and our policyholders, and clear the depositors in the context of the banks. What's happening here is that given the uncertainty looking ahead, we continue to see it prudent to focus on maintaining capital levels. At the end of it all, I see capital almost as the insurance protection for our policyholders and our policyholders. And I think for me, certainly as a CFO, it's almost the most primary and basic role that I actually play here. Now, in respect of, at the end of it all, pricing is a function of market conditions. NCB by itself can't go forward and move interest rates in a market where our competitors are doing something different, right? We have to stay within the market. We have to price within the context of the market. And price movements that are reflected are a reflection of what's happening with the market, which oftentimes is driven by what's happening with the central bank in terms of their monetary policy adjustments and all that. So this is not an attempt to pass on unnecessary or unwarranted risk to customers. This is a simply normal business practice. As I said, the normal market conditions, our attempts to maintain the sustainability and strength of the organization. At the end of it all, it's for the protection of our depositors and also the protection of our shareholders.
All right, thanks, Dennis. And I suppose your question there would probably answer the follow-up one, which was why not even consider a limited share buyback when NCBFG is one of the worst performing main market stocks year to date? You can comment.
Well, a share buyback in substance is the same as a dividend payment. It would result in a reduction in the capital base, and as I said earlier, we see bolstering capital base as our primary drive at this time.
All right, Mr. Rose has also asked Mr. Cohen, NCBFG's income tax line in effect shrunk by 90% year over year. Is it that there are a lot of tax credits being used now? What's the reason for that movement?
Okay, sure. We have, in fact, there is significant income being generated in territories which have a lower tax rate than is the case in Jamaica. And in addition to that, we had a situation where there was an overstatement of the tax charges in prior periods, and the adjustments have been made in the current period, and hence the disparity when you do the comparisons year over year.
All right, thanks, Dennis. And the last question that I'm seeing here for you from Mr. Rose is with respect to last financial year ending 2021, was the just about $2 billion outflow of cash to subsidiary related to TFOB 2021, or was that for some other subsidiary? And he says this in the context of not seeing any capital injections for Guardian, Clarion, or NCBJ.
I didn't get that. Repeat that.
So the question was with respect to last year, was the just about $2 billion outflow of cash to subsidiary related to TFOB, or was it for some other subsidiary?
Yeah, there were payments out to TFOB primarily. That's correct.
Okay, thank you. I'll do, I think, a last check to see if we've been able to resolve the issues with respect, the technical issues that we were experiencing, and if so, we can take the questions for Bob at this time, and if not, I'll move to Plan B. Bob? Yes. Okay. Yes, I am going to repeat. Yeah, I am going to repeat the question, and then you can go into the answer. So if we enter a recession in the next 6 to 12 months, how does technology or digital capabilities help NCB manage through that, whether it's managing for fewer credit losses or lower credit losses, expenses, more flexibility, more revenues, or gaining market share? What's the benefit of all the technology investments if we have a recession over the next few months? And the question was from Ralston Samuels.
Technology on a continuous basis over time to improve our ability to compete, to differentiate and build resilience. And, accelerating our digital capabilities enables growth, which allows us to confront, a market environment which is deflationary, less than stable. It allows us to decrease costs, and it allows us to progress as a data and insights-driven organization. So it allows for speed, stability and flexibility. Security allows us to comply with our various regulatory obligations, drives efficiency, as I said before, and also the customer experience. And these technology principles are applicable right throughout business cycles, whether it's an upturn or a downturn. So the case is well made. And recently we would have heard Satya Nadella of Microsoft saying that every organization in every industry will have to, or as a necessity, infuse technology across every business process and function. So the technology allows us to do more with less. And it is felt that, investment in technology is actually a deflationary force in an inflationary economy and environment. So, in summary, I would say that, continuous investment allows us to differentiate and build resilience and actually do more with less, and those are important principles in any environment.
Thank you, Bob. And then we have another question from Mr. Samuels in relation to a possible recession. The question is, given all the macro uncertainty, if we enter a recession, what segments do you think in what segments do you think there may be some losses? And he, of course, names a few and then asks, how do you expect that likely economic downturn to play out? And how is NCB hedging against the probability?
All right, that's a heavy question from Ralston again. I'd approach the answer by saying that, if you look at this group, in particular the NCBJ banking group, and it also extends to the financial group as well, we have well-diversified businesses across, both risk and revenue streams. And in fact, if you want a true test of that kind of resiliency, if you take the period, let's say 2020, 2021, in the heights of COVID-19, that was as severe a stress test as one could imagine. And you would have seen our resiliency. And that resilience, I'd say, lies in terms of our approach to our strategy. We have pretty much been a forward-looking group, and we get better at anticipating changes in the environment that may affect our business. And by doing this, it allows us to anticipate both risks and opportunities and then make the adjustments ahead of time. And so we anticipate many shifts. There are macroeconomic shifts, there are shifting consumer attitudes and behavior, regulatory, competitive dynamics, technology adoption, and so on. And so we believe that irrespective of the shock, to the extent that we focus primarily on the operating model, which allows us to respond to shocks better, we believe that there are units within the group that, will respond. So, if we have a sharp downturn in economic activity and output, it's typically expected that, for example, we'll see a rise in unemployment, potentially, reduction in GDP outturn. We may also see credit contraction, reduction in consumer. But as I said before, because of the way we're diversified, you will always find an element, of our business that responds. So, for example, it could be argued that our wealth management business could respond favorably to such an environment. Our treasury business would also respond favorably to such an environment. And then the way we manage our risks allows us to anticipate and make the necessary shifts. So all in all, I believe that we have focused on ensuring that we have a business and transform that operating model so we can absorb future shocks better. And there will be, shocks, but we believe that we have built a business and an operating model that can respond to shocks in a better way.
Okay. Thanks, Bob. We're going to ask Ravi to comment on that same question with respect to Guardian. So just to recall, the question is in relation to a potential sustained downturn in economic activity and what's the expected impact on the business. Where are you expecting to see particular challenges, and how is the Guardian Group hedging against the probability?
Good morning, everyone. Dave, just to confirm that I am being heard?
Being heard, Ravi.
Okay, thank you. Good morning, everyone. And as Bob said, it's a very good question. It's a very insightful question. I will break my answer down by two main lines of business, which is the property and casualty business and the life business. There's also, of course, wealth management business under the Guardian umbrella, but the response is very similar to what Bob would have said for that area. So on the PNC line of business, it will create challenges for us because revenue is proportional to the amount of wealth that people has because they insure their wealth or their assets. And as we have a challenge in the economy, it puts a lot of pressure there. It's also going to put pressure on pricing because the market is pretty competitive and everyone is going to try to preserve market share. And the danger is that there's a race to the bottom in terms of rates. Notwithstanding, this is where the investments that we have made in technology will serve us extremely well because our technology is allowing us to make significant impact into our costs. So we improve our margin there to protect against the downturn, and also into our insights because we've developed technology to make us increasingly able to focus on the more profitable segments of the market. So we segment our markets better and we target better customers or better areas of for underwriting profits. Now, property and casualty is about 25% of the Guardian business by profits. Most of the other 75% comes from life, health, and pensions. Now, the downturn in the economy will affect that area as well, but we have developed some hedges, and there are also some natural hedges. So it will tend to have an impact, or it may be perceived to have a significant impact on the revenue side. However, it's a proven fact. Any life, health, and pension company that has a good distribution system will prove resilient to economic downturn on the revenue side, simply because a well-trained distribution channel has the ability to change the focus of sales from wealth accumulation to wealth protection when there's an economic downturn. And actually, products geared towards wealth protection on the life, health, and pension side have better margins than those to do with wealth accumulation. So, and we've seen that shift already. That shift has happened many times over the history of the Guardian Group. We've also always been able to successfully make that transition. On top of that, we have invested a lot in digital technology and data analytics. So we are increasingly getting a lot more revenue from cross sales through a deep advanced analytics of our portfolio base. And the ratio of effort to sales is increasing sharply. And that is really going to continue to propel a lot of our growth and be resilient to any downturn in the economy. Of course, on the asset side, because the life, health, and pension business holds a tremendous amount of assets as reserves against liabilities, there is a exposure to drop in asset values due to an economic downturn. However, it must be noted that an insurance company operates both on the asset side of its balance sheet and the liability side. And through our actuaries, we have developed a lot of technology to match those assets and our liabilities so that downward shifts in asset values are to a significant degree dampened by a commensurate downward shift in liability values. So all in all, we have a fair bit of resilience to any economic downturn.
All right, thank you, Ravi. Next question from Ralston Samuels, which will be for Bob. There have been recent comments from the Bank of Jamaica Governor and the Minister of Finance regarding the Financial Services Protection Bill to address consumer protection in the financial services industry. And he says he's just curious if you have any early thoughts on ramifications for more rules and regulations and how this in particular might or might not change your thinking about any opportunities that might come up for improving service delivery.
Thanks again. Another good question from Ralston. I'd say banking is one of the most heavily regulated industries, and that's where we operate. And so our approach has always been to embrace regulations which are forward-looking they're enabling, and it balances the interests of your stakeholders, whether it's customers, regulators, and shareholders, to ensure that we have better outcomes. So in this case, this consumer protection bill is specifically geared towards financial services. I must say that this is a fairly well-developed and mature space, and there are numerous countries we can draw the parallels from, certainly the US, Canada, UK, Australia, and in the Caribbean, I believe in Trinidad, there is a financial services ombudsman. So the way we view it, the benefits, if, from such a piece of regulation can help to build trust and confidence to the extent that we consider it a good thing to earn and maintain the trust of our customers, to be fully compliant with, banking services, to protect privacy and so on. That's been the hallmark of financial services, trust and confidence. The other component which we would expect as a part of such a piece of regulation is around, measures around integrity, to be fair and ethical in terms of how we treat with and deal with our customers. And then service, which is important, and that's around how we deliver, and maintain high customer service and standards, how we communicate, how transparent we are in terms of fees and pricing, and accountability in terms of our dealings with our customers. How do we handle complaints, etc. So we believe that, the outcome of such a piece of regulation can be positive for all, as I said, as long as it seeks to balance the interests of the various stakeholders, the customers, the regulators, and the shareholders. So it's something which we embrace.
All right, thanks, Bob. We'll take questions on a couple more themes from David Rose, and then the remaining questions that we have so far on YouTube before we bring this to a close. So here are our two themes from David Rose. The first is a question for Ian Churon, CEO of Clarion. So Ian, the question is this: any update on the state of Clarion and the current state of the Bermudan economy?
Yes, good morning, everybody. Just confirming that you can hear me.
Yes.
Thank you, Dave. And thank you for the question. Thank you, Mr. Rose. Firstly, let me talk to the state of the Bermuda economy. I'm pleased to report that we continue to experience growth. We've had 4 consecutive quarters of GDP growth. Most recently reported approximately 4% GDP growth for the first quarter of this year. The two primary levers of the economy, that being financial services, second being tourism, continue to experience growth with new company starts, both in the life insurance, reinsurance space, which is always a driver towards our economy, population, and then contributions associated with that. Secondarily, tourism has experienced a rebound. The cruise ships are here, tourists are on the streets, and with that, we are seeing reinvestment in our tourism plant and construction, and therefore more beds associated with that, which again will drive the economy as well as a trickle-down effect to all the community at large. Those positions have been validated by external credit ratings. So both Moody's and S&P, most recently Moody's, have affirmed Bermuda's credit rating at an A2 rating, and S&P earlier this year in April at an A+ rating. So that is a significant validation of efforts and performance. The government is focused on a 31-point economic recovery plan and making significant progress against many of those aspects. You can imagine 31 is a very broad number, but those that are most significant and material are enjoying progress. Insofar as Clarion is concerned, firstly, let me comment on strength and stability. From a capital ratio perspective, our capital ratios exceed 21%, north of 21%, with a significant surplus over our minimum regulatory capital requirements. And with that, that then supports our ability to grow. And from a liquidity perspective, we are equally quite liquid at this point in time, and therefore looking for opportunities. I am pleased to report that come towards the year end, that we will experience north of a 5% growth in our loan portfolio. That's primarily driven in infrastructure and sovereign related financing, as well as high-end residential real estate financing. And equally, on an asset quality basis, our NPL position will have improved significantly, north of a 30% improvement year on year from September to September, which by all expectations then will result in an NPL to total loan ratio improved by north of 35%. And so we are on a flight path towards that and making significant progress. And I'm pleased to be able to report that. The second driver of Clarion is around its fee-based income. We unfortunately have experienced some reductions in our fee income associated with the global markets and our asset management business. As everybody is probably aware, the global markets are down north of 20%, and therefore our fee-based income has been impacted accordingly. And so we are looking at our transaction banking as well as our asset management business to make sure, first of all, that we retain, second of all, we penetrate, and then third, that we are successful on our acquisition opportunities. So generally speaking, Mr. Rose, things are looking positive, and thank you for your question.
Thank you, Ian. All right, so I'll take a question at this point from that we received via YouTube from Stefan Flowers. I don't know whether Patrick, you want to take it, or if not, maybe Stephen Gooden could take it. Any update on the Stratos Alternative Investment project? All right, so we'll shoot that one to Stephen Gooden, CEO of NCB Capital Markets.
You hear me, Dave? Dave confirming that you are here?
Yes, we're hearing.
Okay, great. All right, thanks for that question. All right, so the Stratos Alternative Investments platform, we're pretty much performing in line with expectations. We currently have 4 funds, right? And it's our intention to launch a 5th fund in short order in collaboration with the Development Bank of Jamaica. In terms of our performance, for the most part, the funds have exceeded targeted returns. For the upcoming financial year, there will be significant focus on fundraising, right? We do believe that in this environment in particular, that the Stratos product is very relevant, both from a fundraising perspective for corporates that we interact with, businesses that we interact with, as well as investment opportunities, the provision of investment opportunities for our wealth management clients that are seeking a higher rate of return on their investments. So Stratos for us is tracking as planned, and we expect a very bright future going into the upcoming financial year.
Thank you, Stephen. Question from Mike Johnson on YouTube, and I'll direct this one to Bob. What more measures would be put in place to protect clients from inside scamming from bank employees?
All right, so let me answer the question this way. Thank you for that one. So of course, we take security and safety seriously. It's, as I would have said earlier, the foundation of trust, and it's the foundation of our business. We have been, I believe, very forthright and fully transparent on this matter. Our aim is to ensure that we protect our customers and simultaneously protect our business. And so we are evolving, I would say, deepening our understanding of controls and security in a digital world in particular. We have been investing in terms of tightening the control environment, especially in an environment that is increasingly digital, whilst we reconfigure the operating model. We have been placing far more emphasis around the prevention, the detection, and the mitigation of fraud. And I'd say in so doing, we are conscious of balancing, and constantly calibrating between the need for security and the customer experience. And then more importantly, we are expanding our partnerships with, our relationship with both the regulators and in particular law enforcement to ensure that we combat financial crimes. We continue to invest in ensuring that our transactions are secure. So for example, we have been PCI certified for quite a while now, and that is to ensure that, customer data is secured, whether in flight or at rest. And so I'd say it's a continuous process, and the primary mantra is to ensure that we protect our customers and protect our business. And we are strident on it, and we are forthright on it.
And Bob, you want to just expand for any participants who may not be aware what PCI compliant means?
Okay, so PCI is a payments industry, compliance regime. It means payment card industry, and it's a certification that entities within a payments business would seek to ensure that they, one, get the certification, and two, get ongoing recertification. And we have been successful in continuously maintaining our PCI certification status. And I said before, primary factor underpinning this is to ensure that we secure customer data, whether it's in flight or it is at rest. And we believe, gaining and maintaining this sort of certification, facilitates trust and confidence in our business.
Thanks, Bob. And we will close out with some questions from David Rose in relation to our network and impact on certain business lines. Mr. Rose has said that NCB has the largest POS and ABM network in the country. However, nearly every month end, there are issues with the service which impact commerce. Lines wrap around branches or at different third-party locations, with people driving all over in different locations to find a working one. Even POS devices don't work for merchants at times. Is it an operational issue for NCB, an issue with the network provider, or both? Or is there a role in which merchants need better training, or is it related to the same underlying issues?
You're addressing that one to me already.
Addressing it to you, Bob, but of course, using your CEO's prerogative, you can redirect it if you so choose.
We take it. So there's a continuous need, as I said earlier, to pursue technology modernization. So there's a continuous need to upgrade the payments infrastructure, operational enhancement to improve resilience. Now, as David has said, you're right. We have the largest network and scale in Jamaica, and we continue to invest in it to ensure that we have continuous uptime or better availability. It has been improving. It is not where we need it to be. And so we're going to continue to make the necessary investments to improve availability, and also, to ensure that we reduce the downtime. And we have convenient locations. So we continue to invest in, for example, ABMs, both off-site Off-site meaning away from the branch and on branch. In terms of the wraparounds related to the branches, I presume this has improved, and as restrictions under the COVID-19 protocols have been removed, we're seeing an improvement in that regard. I would say that if I take, for example, the ABM network, in any given month, we process 2.6 million transactions across that ABM network. We constantly monitor in real time for any what I'd call faults, and there are various faults, faults which can be attributed to hardware, faults attributed to software, faults sometimes attributed to technology, connectivity, and then maybe issues related to cash. Happy to say that by and large, we have not seen any significant outages in cash. We have connectivity issues from time to time, and that's due to telecoms. And we work with our providers, to improve that level of availability. Cash levels, we constantly calibrate to ensure we have cash levels in the system. Hardware faults happen because of the usage of this large network. And what we do is ensure that the service level agreements that we have with our various partners, we continue to calibrate on those. And so we expect that, as I said, we have seen availability improve over time, not yet where we want to be, and we are continuously working to ensure that it gets there.
Thank you, Bob. With respect to the question that you just answered regarding, I think, the traffic in branches, I wonder if perhaps Sherry Martin, our head of consumer and SME, wants to comment at this point on what some of the opportunities are for persons to access our consumer and SME banking services without having to stand in lines outside. Sherry?
Thank you, Dave. Good morning, everyone. So to follow on in terms of what Bob just said, we are continuing to ensure that we can stand up to scrutiny as far as our touch points are concerned. So both in branch and on our digital channels. And yes, we have been spending more time looking at the online journeys for customers, such that those options, once we are able to have customers on board, really represent value of time and as well as convenience. Which doesn't mean to say we're not interested in what the in-branch experience is. Absolutely not. We are. And we want to ensure that, having customers come into our branches, the transactions they're doing there are both digital and face-to-face in nature. And so if you think about how the branches are constructed now with the on-the-go areas, Bob's points about wanting to have time with our channels would be complementary to that, because to the extent that they're bank on the go areas where persons are using ATMs, trying to access services there, the emphasis is ensuring that the uptime is as we'd like it to be. And then inside, with interactions, we have in fact carved out, special treatment for our seniors or disabled. We do, however, believe that some of the reasons why persons are coming into branches can be eventually phased out by virtue of the options that we have for opening accounts, as an example, doing that online, getting certain account maintenance activities sorted out at convenience from online services, whether call center, mobile app, online banking. And it's working through that transition that we continue to focus on and manage. We do have digital literacy and adoption focus for our customers, and the ability to invest in helping them to use these channels and educating them safely on the use of these channels means that this option of using the branch for day-to-day transactions outside of the bank on the go area, would be minimized and would almost require you to want to specifically identify why you need to interact inside of a branch as opposed to using a channel. And so those are some of the things that we're focused on as far as the in-branch touch point is concerned.
Okay, great. Thank you, Cherie. And of course, if persons do need to come into a branch, they are encouraged to use the online appointment system available on jncb.com so that they can schedule a good time to come in. Finally, Mr. Blake, again from Mr. Rose, is it that NCB will be focusing more on reducing its physical footprint and going digital with a focus on having a sufficient working ABM fleet?
So I'd say we are focused on optimizing our physical footprint and leveraging digital to amplify, or to improve our cost to serve, which in a sense is allowing us to deliver good value at a lower operating cost. I would also say that the investments in digital augur well for the physical network in the sense that both our digital channels and our physical channels, the idea is that both of them will sit on top of a digital infrastructure, which gives us the scalability and the flexibility, reduces our costs, and also improves the customer experience. I will also say that we have seen the benefits of the investment in the digital infrastructure. As I was saying earlier, in the branches, what we have seen is now, and the trend is there, the data is there to support it. Less than 5% of financial transactions take place in the branch. Greater than 95% of these transactions take place on our digital channels. And so we'll now look to adjust our focus, and I'm sure you would have hinted at it earlier, to focus on opportunities in terms of onboarding, opportunities in terms of sales, and opportunities in terms of, let me say advice, as in the case of NCB capital markets and so on. So leveraging the digital technologies for the benefit of both the digital distribution network, but also the physical distribution network.
All right, thank you very much, Bob, and thank you to our panelists and to the persons who have submitted questions. That brings us to the end of the Q&A section. So back over to you, Mr. Cohen.
Thank you, Dave. In closing, I really want to express my sincere appreciation to everyone who has played a role in putting this investor briefing together. I think as we evolve, I'm really getting a deeper appreciation. Certainly, in particular, I think I walk away oftentimes with important insights. The questions that come in help to clarify our strategy. It helps to provide us feedback on what we're doing and how we're doing it. And I think I must, again, express my sincere appreciation to persons who have participated. The setting here has been great. The whole organization has been pretty good. Technology failed us slightly, but came back eventually. I just want to thank everyone who contributed in every single way to what I will consider to be a really insightful and very positive investor briefing, and I certainly look forward to our next meeting, which I think is scheduled for November. Thank you all, and have a great holiday weekend. Thanks.
We know what you want to do more of, and it's not waiting for life to happen. You want to explore more. New worlds, different passions. You want to share more. Amazing experiences, knowledge. You want to care more. For yourself, for the people around you. We know you want to do more things in life, so Clarion does more for you. In choosing the right experts to meet your every need. In products and services to reach your goals. And now, we do more than any other bank, digitally, empowering